to the Web3 Prof Podcast.
Good morning and good afternoon, everyone. I'm here with Sebastien Davies, who is the VP of Research from Aquanow. Sebastien, thanks for being with me here today.
Thanks for having me. It's a good time.
So, Sebastien, we're going to talk about some interesting aspects of finance today. Before we get into that, I'd love to hear from you. Tell us your background. How did you get into the world of crypto or Web3?
Yeah, it's kind of a funny story. So I guess I come from a traditional financial background, done a bunch of different stuff, from like treasury management at a public oil and gas issuer. I worked at a hedge fund. I worked at a bank, selling institutional equities and derivatives. And throughout that time, I had a few friends who kind of got into the crypto side of things, and one in particular was always kind of telling me to buy and all that kind of stuff. And I was always saying, I'm like, oh, I'm a stock guy, I work at a hedge fund. This is my edge. I'll do this instead. And I've since come to think that no one really has an edge. But nevertheless, I moved to Toronto in 2020, so during the pandemic, and it was like one of the most locked down cities in North America. And so I had a lot of extra time on my hands because I couldn't really go out and make friends or do anything. And so once again, my friends started hounding me. This is right after DeFi summer, and they're like, look, you really got to look at this stuff. It sounds like the financial things that you're interested in are happening in this space now too. And so if anything, you could help us kind of understand what's going on. And so I first started looking at the online money markets like Aave and Compound, and was pretty taken by them. I thought it was a super interesting piece of technology where there's piece of code that people would borrow and lend against, and it kind of made sense. The rates were a little bit crazy, I thought, but at the same time you could see a world where over time this would could be something that was institutionalized or whatever else. And so that kind of got me thinking about crypto in a different way. And then I remember just sitting at my desk on in the stock market or whatever else, and kind of seeing little hints here and there that this change is coming to my space, and I could sit here and wait for that to happen, or I could try to go and join the innovative crowd. And I happened to know the guys from Aquanow for a long time. One of those same friends who'd been hounding me to buy crypto the whole time was kind of number, I think, 4 or 5 or something like that in the door there. And so I reached out to them and asked if there was a way for me to come aboard.
Amazing. And that decision for you to leave traditional finance to go into the seedy underbelly of finance and crypto, as some people probably believe it to be. Was that a controversial decision amongst your peers? Were they like, oh, what's he doing? He's not doing well in life. He's working in crypto.
Yeah, for sure there was. This was top of the market too.
Okay. Okay, that changes things.
Yeah, this would have been, so I started January of 2022. So things were, just, I guess, coming off a little bit. But by the time I told my work beforehand, so I would have told them right at the very peak kind of thing.
$69,000 Bitcoin.
Pretty much, yeah. I top ticked it. I top ticked it. Yeah, not good. And so yeah, there was definitely some people who were wondering about that. I had some friends who really kind of grilled me on the whole idea of even just leaving the bank, because it's a pretty good job. I had a pretty good gig, and they'd moved me to Toronto recently to try to accelerate my career and that, but. Yeah, it was really resonating with me, and I'm really glad I did the move as well, because that job is awesome, and it's gonna be there, I guess. But this is a pretty unique opportunity, I think, to be part of something. Maybe not from the grassroots level. I feel like I've kind of got it just after that period, but still a lot of collaboration and everyone working together and that kind of thing, which you don't really see a lot in traditional finance. Like the people on the buy side or the investors, they all kind of think their ideas are their intellectual property, and then certainly the bank's not about to co-host events with other banks, right? Unless it's a charity thing. Yeah. And so whereas here it's this real feeling of community where say for example I'm doing a meeting for early stage investing, I do work on our venture team. If I'm meeting a company and we're not going to invest in them, I can still connect them with someone else in the ecosystem, and it's that's expected, right? Or if we're not investing in them, they don't take that the wrong way. They might still do business with another part of Aquanow or something like that instead. It's very collaborative, and it's a really cool experience.
That's amazing. So tell us what. Who is Aquanow? This is a brand that probably a lot of people aren't familiar with. So break down, what do you guys actually do?
Yeah, good question, and you're correct. I think for the size of the company, it's definitely not it kind of flies under the radar a little bit.
Yeah.
So we provide liquidity and trading infrastructure to financial service businesses who want to enable crypto on their platforms. So that can be anything from like a retail exchange who's already got market makers or people who provide bid and asks on different tokens, for example. But they can also use our API to add some depth to their order books. So that just means that you as a user, when you go to trade there, there's more a bit like tighter pricing to be able to buy or sell because more people are quoting markets.
And is this going to be on centralized exchanges or is this also in DeFi or one or the other?
Okay, so for now, it's all centralized exchanges or other centralized counterparties. So for example, like a neobank or a robo-advisor. So if you're logging into something like a Robinhood or something like that, and there, you can buy and sell ETFs or stocks, and you buy or sell Bitcoin or Ethereum or stable coins or whatever, that would be us on the back end that does all that.
And is it only crypto or do you do traditional financial products as well?
It's only crypto.
Okay. So when I use and what other major exchanges or brands are you guys underpinning that we would know?
So we don't really talk much about the list of clients because I mean they're kind of competitors against one another. So if I say one and not the other, it can be bad.
I see.
But in Canada, for example, if you buy crypto, there's probably a 50 or 60% chance you're buying it from Aquanow in one way or another.
I see.
Not you won't face us, but it'll be like that. And then that's about a third of our business overall. So while we are like big in Canada, we're like a global business. So we've got office in Dubai, an office in Turkey, people who work for us out of the APAC regions as well, licenses in all those regions and in Europe as well. Actually, I should say in the UAE we have a provisional license, not an operating license yet. But
that's an important distinguishing factor.
Yes, yeah, for sure. I don't want to be misrepresenting or anything like that, but yeah, so it's cool. It's a big business, but because it's infrastructure, you don't really hear about it. We're trying to get out into the public a bit more now. So people like me doing things like this, but yeah, otherwise.
So does the public need to know about you guys? Like, do I need to know who Aquanow is if I'm a day trader or if I'm just the average guy buying crypto every now and again? Do I need to know who you are, or is your business model really fully a B2B model?
It is totally B2B. Yeah. So it helps if people know the brand and know the name so that when our salespeople or our executives are out there trying to grow the business, that they're able to recognize that brand, right? Because if they've heard of, ABC, but they haven't heard of Aquanow, it's makes it like a bit more of a difficult conversation. Whereas like, oh yeah, you guys are a market leader. Perfect. Okay. That makes it a bit easier to put your proposal to the top of the pile.
So when I log into crypto.com or formerly, FTX, is there a way for me to find out who is providing liquidity for the tokens I'm trading? Or is that typically information that's not publicly available? And should I know that? Like, should I care?
That is a good and interesting question. I don't know that it's publicly disclosed. The other groups in the world who do this kind of work, they also operate a little bit behind the scenes. Yeah, they tend to be. You'll see them at crypto events sponsoring, and like so they'll have like booths and logos and stuff like that there. Yeah. But like, I don't think typically no, and I don't actually know why that would be, if there's a regulatory reason or something else. But and no, it doesn't really matter who you're dealing with on that side, in the sense that best execution is best execution. So the price is price, and that should work. And we don't ever like custody or hold assets. It's really mostly just like a pass through to on execution basis. Yeah.
Okay. So you've written quite a bit. And you're publishing blog posts and things like that for Aquanow on various different topics. And I would say they're quite complex topics. They're quite complex financial topics for like average people to understand outside of the financial industry. But I'd love to get, kind of a sense of some of these things that you talk about or that you write about or that are important to your industry, because, for people who are getting into crypto, you start to hear some of these terms and you're like, what is that? What is a ZK proof, or what is a privacy pool? And you hear these terms and it's kind of like almost spoken like a bunch of people know what it is. And then it leaves the rest of us thinking, boy, I'm just not quite smart enough here. I've never heard that term before. So I'd love for you to explain some of these things. So first thing I want to talk about is like, what is a privacy pool? I've read stuff you've written about privacy pools. Why do we care, or why is this a relevant thing for us to consider?
So to your point on like jargon, it's tough, right? And finance has its own set of like its own
Right.
kind of glossary, and then you've got crypto with its own, and then you throw like technology in there too. It's tricky, like thank goodness for Google, or like ChatGPT, I guess now. So privacy pool, it's come about because typically on a public blockchain, if your wallet is interacting with the chain, transacting or swapping or whatever it might be, all of that history can be seen, which doesn't really matter if you're not doing a lot with it. But I mean, to the extent that people are going to start spending a lot more time on chain, doing different things, interacting with social apps and all that kind of stuff, you start to leave a pretty big footprint. This is actually something that the authorities in many countries have come to like, because they can actually, see what's happening, observe the chain, maybe try to track illicit activity and that kind of thing. So it's it can be a positive, but I mean, I think at the end of the day, if the government really wanted to know how you're spending all your money, like using your debit card, they probably could find out, but
Sure.
it's not something that's publicly available for everyone to see at any given moment.
Yeah.
And that's effectively what's happening when you're transacting on chain, unless you are using some sort of like privacy protection. And so different iterations of technology have come about to try to protect people's identities or distance their, like, maybe their real life identity from their wallet identity. And that's a journey that the industry's kind of continues to go through. But a little while back, if we'll rewind it a little bit further. So last year, there was a protocol called Tornado Cash, which is like a mixer whereby people could send tokens, in the front door, and then withdraw different tokens on the back door. And then the provenance of the tokens leaving can't really be sourced, because there's so many different like transactions happening at this protocol level.
Provenance meaning the original place which they occurred.
That's right. Yes. Yeah, exactly. So what that means is that the wallet taking the funds out, all of a sudden these funds don't have a long historical trail of where they came from and all that. And so that can be an interesting way of erasing a transaction history if you want to preserve privacy, which is good. But unfortunately, a lot of bad actors were using that to clean funds that had been stolen from an exploit or a hack or something like that, or even maybe for like money laundering purposes. And so the authorities in the U.S. shut that down. They actually pressed charges against, and I think they've now since jailed the creators of that protocol. That's creating a whole other buzz in terms of like code is law and all that kind of stuff. But it's a really fascinating area of exploration. If you want to fall down a rabbit hole one weekend, it's a pretty good one to go check out. But nevertheless, that's kind of sparked a discussion around like what are some other ways that we could try to like bring privacy to blockchains without ruffling those feathers too much. And so Vitalik Buterin, who is like a figurehead for Ethereum, proposed, along with a few other folks as well, the idea of like a privacy pool, whereby you could deposit tokens into a protocol or like a smart contract, and using ZK proofs, which I'll talk about in a second, you could attest that the history of these transactions was legitimate, and then you could at a later date withdraw funds from that pool, and then have those now be have the history of those tokens be cleared out.
So it anonymizes the transaction?
Yes.
In some way. So how is that different than a mixer? Or how is that different than Tornado Cash, which became so controversial? Because to me, it sounds like it's the same thing without understanding both of them.
So in the case of Tornado Cash, you actually could opt in to do what this protocol was going to do.
Okay.
No one really did it.
Yeah.
So it was kind of an unbinding constraint. But in the case of the privacy pool, there's like a waiting period as well. So the tokens come in, you can attest that this history is not coming from ill-gotten goods, and then you can withdraw. And there's like a temporary waiting period, and other levels of complexity that they've added on over throughout as well. But
like days or minutes, or like what kind of waiting period?
I think initially it was like a couple days.
Okay.
So not going to work at an institutional level, but the idea would be that the money, the tokens would go in, and then there'd be a cool down period. At that point, the history of the wallet could then be tested further, right? So then it's like, oh, hold on a second, these funds actually came from this hack or this exploit over here. Those are not going to be, those are going to be frozen or flagged or not going to be able to be anonymized.
Would that be a human being doing research to figure that out, or is the technology going to figure out if it came from a hack?
It'd probably be a mix of both. But yeah, certainly there would be like a council of people, a community kind of governing the pools.
And is the pool then, the pool is run by a company that is taking a fee or something like that? They have to make money somehow for managing this pool, I would imagine.
Yeah, it would be like a decentralized application.
Okay.
And so it would probably have its own token, with governance and voting and all that kind of, like you see on a lot of different protocols. Okay.
So I want to send you Ethereum. I process this through this DeFi protocol called a pool, and a couple days later you get the Ethereum, but no one can track where it came from, nor do they know that it entered your wallet. Am I understanding that correctly?
That would be correct. Yeah, you would see there would be a transaction on chain that would say that the protocol sent this wallet or my wallet, X amount of tokens.
Okay, and is there a risk then? Because we're putting trust at some level in the protocol to not, because they're holding custody of our coins during that cooling period, right?
Well, it's a smart contract.
Okay.
So it would be governed by, like your typical on-chain governance. And so beyond the 2-day cooldown period, if there was no flagged incidents or issues with that, based on like people voting with their tokens, then the funds would be free to be then transferred.
Yeah. So what are the big risks that we have here, or what are the hangups with this becoming the thing that everybody does?
So the issue I see is well, I guess maybe a couple things. First, there's the idea that like there's always smart contract risk. So there's some some code vulnerability or whatever else could cause an issue. So there's that. Then the idea of, there could be some issues around the governance as well. Like sometimes decentralized governance is messy. So there could be some problems there. The cooldown period itself is really like a non-starter for any kind of institutional kind of use case, right? For people like ourselves, who it's like, could you wait for me a couple of days for me to send you these things? Or if I have enough, credibility, sometimes maybe they could shorten that wait period. But nevertheless, right, there's issues around that. And so some of the ways we've seen, or other ways that have been proposed to get around this are the idea of you could use, again, the ZK proofs, which I forgot to talk about before, but I will clarify that what that is in a minute, to say that someone's KYC, or like know your client, or like anti-money laundering identification has been recorded at some point. Now, I don't, that doesn't have to be known who like there's not to be a link beyond the fact that it has been recorded, but I can say like, okay, this person's identity has been attested to, and then they can transact on chain privately. And then if the government, if the authorities or someone sees patterns of transactions that are looking suspicious, then they can say, okay, hold on a second, who is this, or who's doing these things over here?
Yeah.
And then at some point the identity could be revealed.
Yeah.
And so that's I think based on like how I look at the world from a more traditional financial background, that makes a little bit more sense, I think, in the sense of, you don't have these cooldown periods. It's not kind of clunky. Yes, you are providing off-chain identity, and so some people will not like that, and I hear you, but it's a lot shorter of a a gap to go from the way the current traditional financial system works to an on-chain kind of ecosystem. And so by having this kind of like mid gap, at least like the authorities, the incumbents, everyone's kind of makes it a little bit more comfortable to get to that level of adoption, I think.
Yeah. Okay, that's great. Well, yeah, let's get into then. So yeah, ZK proofs. I hear this term all the time. Zero knowledge proofs. What does that actually mean, and how would we, or why do we care about using that type of technology?
So I think one of the better like analogies I've heard used to explain like a ZK proofs would be, let's say I had a box and I wanted to prove, and I said there's a toy in this box. How could I convince you that there's a toy in the box without actually opening it and showing you?
Yeah.
And so, maybe I could shake it and then you're like, oh, okay. Or you could, roll it around and feel, and you're like, oh, okay, actually, like I have pretty good confidence that there's a toy in that box. I'm happy with that. And then you can move on without opening it. And so ZK proofs do a version of like shaking it and rolling it around using cryptography.
Okay.
And so
this is to help people verify the identity or the wallet of someone that's sending crypto from one place to another. It's a technology to anonymize somebody.
Yeah, it doesn't always necessarily have to be around identity. It can be around other things. For example, it could be I can claim to have operated under on all the rules of a blockchain, for example, without actually having to show you check, I've done all these things, right? And so it's a way to make things a bit faster and a little bit more efficient while also providing some privacy.
Okay. So when we engage with a centralized exchange, we have to go through this KYC process of, scanning our driver's license and moving around on camera to make sure we're a real person, and we jump through all these hoops to make sure that we're legitimate, and then presumably the centralized exchange checks us out to make sure that we are who we say we are. Is a ZK proof like the DeFi version of that type of thing? Is it trying to accomplish the same type of process?
It could be, for sure. So say for example, you're starting to see this happening right now as well. With Coinbase having Base and then bringing some of their identity to that chain and providing people some perks to do that. So say for example, I go to a KYC operator. Okay, these guys have this as their business. They're going to provide on-chain identity. Yeah. I do the likeness test. I send them my driver's license. So now they know that, okay, Sebastien lives in Canada. Maybe he lives in British Columbia. He is alive. And maybe he's over 19 years old, for example. Yeah. And then now when I go to interact with protocols on chain, I can have this, maybe say for example, I have this token in my wallet, or that technology is embedded with the application that I'm going to use. It'll say, okay, this is the wallet address. So this person who has the private key to this wallet is known to be like myself. And then based on that, he should be able to transact like a Canadian living in British Columbia who's over 19. Yeah. So it would be like, if you go to like a liquor store, for example, or you go to a grocery store and that happens to sell beer or whatever else, they only need to know that you're over 19. They don't need to know your address or whatever else, that kind of thing. And so it's similar to that, where you would without having to tell the operator of the application needing to know my name, my date of birth, and all that kind of stuff. It just needs to know, yes, he does have these check marks, and then can interact with it. And so as you start to bring like securities, like government securities on chain, not anyone can just go and buy U.S. government debt, for example, but people who can should be able to do so freely. And so that's like kind of where this next step goes, where someone who's like Canadian, it's like, oh, okay, it's like Sebastian's over 18 and not from a barred country, so he can own this security which represents U.S. debt, kind of thing. Okay, that's interesting. I'm gonna I don't often do this, but I'm gonna actually read a question because I don't want to confuse any of these terms, because some of the stuff is just so helpful. So when we understand ZK proofs, okay, that's great. So we see that proposed privacy pools leverage zero knowledge proofs to verify the legality of funds without disclosing transaction history.
how might this approach balance the need for user privacy while satisfying the KYC and anti-money laundering regulations? How does this connect to kind of the privacy pool?
So the zero knowledge proof could then be used to say the transaction history is legitimate, without having to like reveal to
who it is.
Exactly who it is. As it was proposed at the baseline, the privacy pool that Vitalik and others suggested didn't actually have a KYC component to it necessarily. They did open the door for maybe including that though, and so that would also be used on the using zero knowledge proofs, to say this person is okay, but without having to actually reveal the identity.
And is this active right now? Like if I go trade on Aave or something like this, or if I'm just a regular guy trading, are ZK proofs active today and something that I might be involved in without even knowing it? Or is this still a concept and a technology that's being developed?
It is active today. So there are versions of the Ethereum virtual machine, which are zero knowledge proof based, that have gone live within the last 12 months, and they're starting to scale up. And so that's, again, offers the ability to provide things, provide like Ethereum-like functionality with faster, lower gas fees, and then have this privacy layer. So that's one example. One of the companies that we're invested in, actually, called Hinkel Protocol, they provide the ability for people to buy, swap, stake, and transfer tokens anonymously as well. They use zero knowledge proofs, and then they also leverage like the off-chain KYC. And so as a result, people can go and use it, make swaps, stake, do all this kind of stuff privately, which is really helpful if you're like a DeFi fund, for example. You don't want necessarily the whole world knowing how you're positioned on things. And so you can obfuscate the identity of who's doing that. But if a government says, "Hey, who is this?" It's like, "Oh, it's ABC DeFi fund."
Okay, that's great. I think that's interesting to also know that this is relevant technology that's happening today. But I guess it's still in its infancy or its early stages. Yeah.
I think like the notion of zero knowledge proofs is not super novel. Its application in blockchain technology is. Things move so fast; it's hard to say.
Right.
But now there's this kind of emerging technology called fully homomorphic encryption, and that's a
say it again.
Fully homomorphic encryption.
Okay,
it's another rabbit hole you can water down. I'm not a cryptographer, so I'm really kind of a little bit out of school on some of these things. But it's also quite interesting, and there's people experimenting with making that FHE based blockchains as well.
Okay.
So it's definitely constantly moving very quickly, but it's pretty cool. You don't have to be super into math to understand how they work from a very high level, and it's pretty neat.
And is this are privacy pools and ZK proofs an Ethereum thing, or is this technology that's being rolled out in all kinds of different blockchains?
No, it's definitely being used in many places. For example, Solana's got some zero knowledge proof protocols that I'm aware of. I don't know too much about what's going on in Cosmos, like Secret Chain the Secret Chain has some privacy preservation kind of components to it. So that there's different versions of approaching this. So some are using zero knowledge proofs, some are using that fully homomorphic encryption, and then others use like encrypted environments or trading environments where it's just a different type of encryption that's protecting it, and it provides privacy that way.
Okay, that's great. Something else that you've written about is this notion of compliant DeFi. Can you explain compliant DeFi? Because to me, it seems like it's a little bit that these are two things that don't really fit together. That compliance and DeFi are kind of the antithesis of each other. So what does that actually mean?
Yeah, no, it's a good point, and I think the the more that the notion of what that is gets tossed around a little bit, I think the term DeFi is just going to fall off of that. I think it'll probably be something closer like protocol-based finance or something like that,
Okay.
where you use smart contracts, but there is a level of permission to using it.
Okay.
So it's it does kind of run afoul of the ethos of DeFi and a lot of crypto in general. Yeah. But again, it is that middle step going from the traditional finance to blockchain-based finance.
Right.
And so I think, for example, if I go back to that example with the government debt thing, where not for better or for worse, the rules that govern the world currently say that not everyone's allowed to own U.S. government debt. And so how could you leverage some of the functionality of blockchain or smart contracts, maybe like an Aave, like a lending market or something like that, with government debt as collateral, for example, right? Not everyone's allowed to transact in it, but if we create a market where the people who are interacting with that protocol have all been identified or deemed to be allowed to do so, then that can be like a smaller kind of closed off market where people could still transact and enjoy the benefits and the efficiencies of the underlying technology while adhering to the rule of law outside.
And would that rule of law be I guess the challenge some companies have with the rule of law is that every state or every province has different regulations, or every country has different regulations. So now you have to, identify where your clients are in order for you to apply the rule of law from different countries in order to be compliant in those places. Am I understanding that right?
Yeah. It's definitely adding layers to the onion, I guess, as opposed to peeling them back.
Yeah.
But and I guess it's what it does unlock is efficiency for the traditional financial kind of system, because you can use code to enforce some of those rules, right?
Yeah.
Which is awesome, I think, especially coming from that world and seeing how much paper and all that is required to do transactions. It's slow. We use Excel for all things. There's 1,000 Excel sheets all over the place. Many of them hold the same information as elsewhere.
Right.
You can kind of organize things in a different way that I think you could bring a lot of efficiency to the space. I'm not discouraging the DeFi as well. I think a lot of the best innovations will come from that open, really, flourishing, challenge the status quo type of technology.
Yeah.
But I think that when it starts to integrate with the traditional financial system, you just have to, wrap it up in a way that it's palatable.
Yeah. Okay. And we see traditional finance getting more and more involved with crypto. It seems Jamie Dimon has been spoken, positively about crypto, which historically he hadn't many times, and we see now BlackRock, moving into the BlackRock ETF. And so, what are the implications of this, or where do you see traditional finance intersecting with some of these decentralized ideas that we talk about?
So that is one of the things that I'm most excited about in the space, and something that I'm still kind of taken aback to see just how much innovation has happened through the bear market in crypto over the last couple of years, where throughout that time, a lot of the world's largest financial institutions and some of the most critical financial market infrastructure has been undergoing pilots trying to explore what it might be like to operate on chain, private chain or public, a mix of the two. And and you start to see opinions change, Bitcoin as this digital gold and new non-sovereign store of value, and it's really fascinating to see in previous cycles, which I was observing, not participating in. You'd always see the banks and brands get excited at the top, right? Whereas in this case, they were really investing at the bottom, which was quite fascinating. So some of the things that I'm most interested in are. This Chainlink is a provider of infrastructure to actually many different blockchain ecosystems, and they have a new thing called the cross-chain interoperability protocol, and think of it as just like a way for different blockchains to communicate with one another and then transfer value. They've actually just done a pilot program with SWIFT, the Society of Worldwide Interbank Transfers, or something like that. And then a number of the world's largest clearing houses. So DTCC in the States, Euroclear in Europe, so they've worked on, how could a bank interact with blockchains without having to change its back office function. So typically, if a bank wanted to engage in a bank from country A wants to buy a security from country B, they would initiate the purchase using the brokerage kind of channel, and then the money actually has to get sent over. And so to let the receiving bank know that this is happening, they would send a SWIFT message, and then later the money would kind of trickle in through the correspondent bank networks, and then that's why it takes multiple days for a transaction to clear. So it's the trade happens, and then the money is received, and then the ownership can transfer. And so with Chainlink, and then some of the world's largest banks like ANZ or Citigroup, and then these infrastructure providers, they tested how that would look on a blockchain. So they said, okay, we're gonna buy asset A, from this blockchain. And so this bank's got a private blockchain, and the back office there would still send the same message like they would send before, like, hey, we're going to send you funds. But then that would actually also get intercepted by Chainlink's technology, and then they would send a blockchain message saying, okay, this is, but I think they can actually transfer value, so they would also send tokens. So from private chain A to private chain B, private chain B receives this, and then DTCC, which was just like a clearinghouse, could say, okay, and then they would be able to say values in securities, or tokenized version of whatever, Apple stock or something like that, has now been settled in Bank A's ledger on this blockchain B, and that's legally binding because they have the ability to do that.
Wow, so interesting. Is Chainlink the leading organization within crypto that's doing stuff like this?
Within crypto, I think that'd probably be a fair statement. But there are a number of different pilots happening with different financial market infrastructure providers. And then, there are groups, which, this is not always popular, but you actually have groups of banks that have got together and doing this themselves. JP Morgan's got this Onyx group, for example, Goldman Sachs too.
Interesting. Yeah, as you say, it's probably not very popular.
Well, no, it's one of the things that's kind of cool is, like, if you can stomach listening to, like, I know this very much flies in the face of a lot of the ethos here, but if you can get through some of the podcasts that the people from Onyx or Goldman Sachs have put on, I mean, maybe it's just all an act, sure, but they have these private blockchains, but they're built in a way that they could be opened up when the time comes.
Right.
And the reasons for not opening them up is, because there are a lot of scams, grifts, and issues where the blockchain's not perfect, I guess,
Sure.
And so it's an interesting perspective. I get it. It's not for everyone, but it's the podcasts are easy to find, and they're pretty interesting.
That's great. That's excellent. Sebastien, it's been great chatting with you. This has been some super helpful and in-depth understanding for especially for those of us who don't work in finance and are grappling with some of these concepts. I think you've explained them really well, and it's been helpful to get some clarity on this. I appreciate you being with me here today.
Thanks for having me. Hopefully it wasn't too jargon laden. And,
Definitely wasn't.
I enjoyed myself. Thanks.
Excellent. Thank you.